My greetings to everyone. In the ongoing series of Finance for Everyone, today we will be discussing on Rural Postal Life Insurance Plans. In the early 1990s, the Indian government recognized that the penetration of the insurance in the country was very low, especially in the rural areas. In 1993, the government established a committee headed by the former RBI Governor R.N. Malhotra to examine the insurance industry in India and provide recommendations to promote its growth. The Malhotra Committee observed that insurance formed only a very small part of India's gross household savings and that the numbers were particularly weak in the rural areas. So the committee recommended the use of the postmasters who enjoyed a high level of trust among the rural customers as a way to popularize the insurance in these areas. Building on this recommendation, the government established the Rural Postal Life Insurance RPLI in 1995 with the aim of providing affordable life insurance to the rural residents. So RPLI leverages the extension network of the post offices across the country, which already provide a range of financial services, including the saving accounts, money orders, and the pension schemes. So let us now see the meaning of the Rural Postal Life Insurance. हर दिन करे 50 रुपए का निवेश और पाएं 15 लाख रुपए. With these kind of slogans, they actually used to leverage the overall penetration of the Rural Postal Life Insurance in the rural areas. So the Rural Postal Life Insurance RPLI is a life insurance scheme offered by Government of India through India Post. And as the name suggests, the scheme is primarily aimed at providing the life insurance coverage to people living in rural areas of the country. The scheme is designed to be affordable and accessible, with a focus on achieving those who may not have easy access to traditional insurance products. The RPLI is offered through the extensive network of post offices across India, which makes it easy for the people in rural areas to access the scheme. The premium for RPLI are generally lower than those for other life insurance products, which makes it more affordable for low-income individuals and the families. RPLI provides a range of life insurance products, including the endowment assurance policies, the whole life insurance, and the children policies. The scheme is open to all Indian citizens between the ages of 19 to 55, and the policies are generally available for the terms between 5 to 35 years. The RPLI is one of the key initiatives of the Indian government to promote the financial inclusion and provide access to affordable financial services in the rural areas. Now moving on to the features of Rural Postal Life Insurance. The Rural Postal Life Insurance is a life insurance scheme offered by the Indian Postal Service, and here are some of the key features, out of which the first is eligibility. Any person who lives in a rural area and has a postal saving account can avail the RPLI. The scheme is also available to people who lives in the urban areas but have a rural postal address. The second is your premium. The premium for RPLI is very affordable and it starts from as low as rupees 15 per month. The premium rates are fixed and they do not change during the entire policy term. The next is your coverage. The RPLI provides life insurance coverage for up to rupees 5 lakhs. In case of the death of the policy holder during the policy term, the sum assured is paid to the nominee. The next is your policy term. The term policy for RPLI is 5 years to 20 years and the policy can be renewed after the end of the term. Next, we talk about the policy types. The RPLI offers two types of policy: endowment assurance, that is EA, and the whole life assurance, that is WLA. The EA, that is the endowment assurance policy, provides a lump sum amount on the maturity or in the event of the policyholder's death, while the WLA policy, that is the whole life assurance policy, provides a death benefit only. Then we talk about the next key feature, that is bonus. RPLI policies also offers the bonus, which are declared by the Government of India from time to time. The bonus is calculated based on the sum assured and the policy period. Next we have is a grace period. The RPLI policies come with a grace period of 1 month for the payment of premiums. And if the policyholder fails to pay the premium within the grace period, the policy will lapse. Next we have the nomination facility. The RPLI policy offers a nomination facility which allows the policyholder to nominate a person and who will receive the benefits in case of policyholder's death. Next we have the tax benefits. RPLI policies offer the tax benefits under Section 80C and Section 10D of the Income Tax Act 1961. Next we have the surrender value. The RPLI policies have a surrender value, which is the amount payable to the policyholder if the policy is surrendered before the maturity date. Now we will be talking on the benefits of the Rural Postal Life Insurance. The Rural Postal Life Insurance schemes offers the various benefits to the policyholder. Let's have a closer look on this. The first is your flexibility in nominations. One of the significant benefits of RPLI schemes is the ability to change the nominations. This means that the policyholder can change the name of the nominee to whom the policy benefits will be paid in case of the policyholder's demise. This particular feature is particularly useful for the people who they want to update their nominations due to changes in their family circumstances, and definitely this is the best feature of RPLI, that is an inbuilt flexibility feature of changing the nomination. The next is your assignment of the policy. Another advantage of RPLI schemes is that the policyholders can assign their policy to a lender to avail a loan. This means that the policyholders can use their insurance policy as collateral for a loan. This feature is particularly useful for the people who may need to access the credit but may not have any other collateral to offer. The next is your duplicate policy bond. In case the original policy bond is lost or destroyed, the RPLI schemes offer a provision of issuing a duplicate policy bond. This means that the policyholders do not have to worry about losing their insurance cover and if they misplace the original policy bond. Next important feature of RPLI benefits is about the revival of the lapsed policy. If a policyholder is unable to pay the premium on time, the policy may lapse and the policyholder may lose the insurance coverage. And however, with the RPLI schemes, the policyholder can revive their lapsed policies by paying the outstanding premium amount along with the penalty. So this benefit is particularly useful for the people who may have missed paying the premium due to financial constraints but want to continue their insurance coverage. Next we have is a conversion of the policy. RPLI schemes offer the provision of converting the policy from a whole life assurance to an endowment assurance. This means that policyholders can change their policy terms and benefit to suit their changing needs. For instance, the policyholders may want to switch from a whole life assurance which provides the lifelong coverage to an endowment assurance which offers a lump sum payment at maturity. So overall we can say the flexibility and affordability of RPLI schemes make them an attractive option for the people who are living in the rural areas. So these schemes not only provide the life insurance coverage, but they also offer a range of the features and the benefits that cater to the specific needs of the rural communities. Now coming on to the insurance schemes. The RPLI offers a variety of insurance schemes to meet the diverse needs of the rural communities. So these schemes include a pure insurance plan as well as the endowment plans. And the customers have the option to switch between plans if needed. So let's take a closer look at some of the key features and the benefits of these particular schemes. So the first is whole life assurance, Grama Suraksha. What is the objective? The objective pays the nominee a sum equal to the assured sum plus accrued bonus in the event of the policy holder's death. The next we have is the eligibility. The minimum entry age is 19 years and the maximum entry age is 55 years. Then we have a conversion. The policy can be converted to an endowment policy after the completion of 1 year of the policy and before the policy holder reaches the age of 59. Look at the sum assured. The minimum sum assured is rupees 10,000 and the maximum is 10 lakhs. There is a loan option as well. The policy holders can avail a loan option after completing 4 years of the policy. Next we have a surrender. Surrender is only possible after completing 3 policy years. And about the premiums. The premiums vary based on the sum assured, the age of the applicant and the other factors. The convertible whole life assurance, Gram Suvidha. What is the objective of Gram Suvidha? The policy pays the nominee a sum equal to the assured sum plus accrued bonus in the event of policyholder's death. Next we have the eligibility. The minimum age is 19 years and the maximum is 50 years. There is a conversion feature also. The policy can be converted to an endowment policy after completion of 5 years of the policy, but not after 6 years. The minimum sum assured is 10,000 and the maximum is 10 lakhs. The loan option, that is the policy holders can avail a loan option after completion of the 4 years. There is a surrender volume also. So the surrender is only possible after completion of the 3 years of the policy, but the bonus is nullified in case you surrender your policy. There is a premium. The premium vary based on the sum assured, age of the applicant and the other factors. Now moving on to another option, that is Grama Santosh, which is an endowment assurance. The objective of this policy is that the policy pays the nominee and the assignee the sum assured plus the accrued bonus until they attain the age of maturity in the event of the policy holder's death. There is an eligibility criteria of the entry age as 19 and the maximum entry age is 55 years. There is a sum assured of 10,000 with the minimum and 10 lakhs with the maximum. The loan option, the policy holders can avail a loan option after completion of the 4 years. There is a surrender value also. The surrender is only possible after completion of the 3 years, but the bonus is nullified in case of the surrender value before 5 years. There is a premium vary based on the sum assured, age of the applicant and the other factors. Then we have another product called Anticipated Endowment Assurance, Gram Sumangal. It is a policy that gives the customers the cash periodically to meet their short-term financial needs and it is available in two types, one for 15 years and the other for 20 years. For the former, the benefits are paid every 6th, 9th and 12 years, and for the later, every 8th, 12th and 16 years. The objective of the scheme is to provide the policyholders with a benefit periodically, and if the policyholder dies, only the sum assured and the accrued bonus will be paid and the staggered payment will stop. So, eligibility criteria requires the minimum entry age to be 19 and the maximum entry age is 45, and the maximum sum assured here is 50 lakhs. Next, we have a very popular policy called Gram Priya, which is a 10-year RPLI. It is an endowment scheme that lasts for 10 years with the insurance coverage starting from the policy purchase date. The scheme objective is to provide the benefit to the policyholder or the nominee after the policy term is completed, and of course the policy covers the sum assured and the accrued benefits. The eligibility criteria requires the minimum age to be 19, the maximum entry age is 45, and the minimum sum assured here is 10,000 and the maximum sum assured is 10 lakhs. There is a scheme for physically handicapped persons also, which provides the benefits only for the sum assured and the accrued bonus in the event of policyholder's death. The medical examination is mandatory to assess the nature and the extent of the handicap, and the eligibility criteria requires the minimum entry age of 19 and the maximum entry age is 55. The minimum and the maximum assured, the sum depends on the premium paid. The policy can be surrendered in case of completion of 3 years, and the policyholders can avail of the loans from lending institutes by pledging the insurance policy. The premiums can vary depending upon the sum assured, the age of the applicant, and the other factors. Then we have a children policy, that is the Bal Jeevan Bima. It is an insurance policy that covers the coverage to the policyholder's children. The children aged between 5 to 20 years are eligible to be covered under this particular policy. The policy can be covered up for only 2 children, and the policyholder must not be older than 45 years of age. Surrendering the policy in this case is not allowed. No medical examination is required to avail this policy. Now moving on to the registration process. The registration process of RPLI is first visit the nearby post office. To register for the RPLI policy, you need to visit your nearest post office which provides the RPLI services. The next is to fill up the application form. Ask the post office staff for the RPLI application form, fill it up with all the required details and attach the necessary documents such as the IV proofs, address proofs and the age proofs. Then submit the form and the documents. After filling up the form and attaching the required documents, you need to submit it to the post office staff. Pay the premiums. The premium for RPLI policy can be paid in cash or through a check or a demand draft. The premium amount will be depending on paid on the type of the policy you choose. Next we have is to collect the policy document. Once the premium is paid, you will receive a receipt and the policy document will be sent to your registered address by post. Now you can also apply for an RPLI policy online also through their official website of India Post. You need to register yourself on the website, fill up the application form, upload the required documentation and pay the premium online. The policy documents will be sent to your registered address by post. To apply for an RPLI policy online through the official website, post, follow these steps. The first, visit the official website of India Post. Go to www.indiapost.gov.in. Click on the Insurance tab on the top menu. Select the Rural Postal Life Insurance. Click on the Rural Postal Life Insurance option from the list of the insurance services offered by India Post. Next is to register on the website. If you are a new user, click on the New User Registration and create an account by providing your details such as your name, your email ID, your mobile number, and if you're already a registered, just move on with the login credentials. Next we have fill up the application form. After logging in, click on Apply Online and fill up the RPLI application form with all the required details like personal information, policy details, and the information which is related to the nominee, your complete address, your email ID, and your phone number. Upload the documents. Next is that you need to upload the scanned documents of the necessary documents like ID proof, address proof, age proof, and make sure that the scanned copies are very clear and legible. Then we have to pay the premium. Pay the premium amount online through a net banking. It can be with the other options also, like by paying through the credit cards or the debit cards, and the premium amount will be depending on the type of the policy you choose. Then we need to submit the form. After paying the premium, review the application form and submit it online. Collect the policy documents. Once the application is proposed and the premium is paid, the policy document will be sent to your registered address by post. After submitting the application online, you can also track the status of your RPLI policy application by logging in to your account on the India Post website. Now moving on with the last part of the presentation, which is relating to documents required for the registration of RPLI. To register for the RPLI policy, you will need to submit the following documents. The first is your identity proof. Any of the following documents can be submitted as the identity proof, out of which the first is the Aadhaar card. Next we have is a PAN number or a PAN card, the voter ID card, the passport and the driving license. These are the key identity proofs, out of which anyone can be submitted. Next we have is the address proof. Again, the documentation which is required can be Aadhaar card, voter ID card, passport, utility bills like electricity bill, water bill and the gas bill. Then we have also a bank statement. Out of all these, one of these can be submitted for the address proof. Next we have is the age proof, out of which any of the documents can be submitted. Again, it is Aadhaar card, PAN card, voter ID card, passport, birth certificate or school or college certificate. Then you need to submit your photograph also. You need to provide a recent passport size photograph and the nominee details. You need to provide the details of the nominee who will receive the benefits of the policy in case of your unfortunate demise. You need to provide the name, relationship, age and the address of the nominee. So after the services offered by the RPLI, you need to pay the premium. That is, the policy holder can pay the premium online or offline depending on their conveniences. The premium can be paid through any of the designated post offices or through an online portal of the India Post. Then we have to pay the premium due date reminder. the policyholder will receive a reminder before the premium is due, and either through an SMS or an email, or that they can pay the premiums on time and avoid the policy for lapsing. Next, we have a policy revival. In case the policy has lapsed, the policyholder can revive the policy within a certain period by paying the due premium along with the date payment charges. Next we have is the change in policy details. The policyholder can make the changes in their policy details like address, nominee change, premium amount, frequently changed by submitting a written request with the relevant documents. Then we have a claim settlement. In the event of the policyholder's death, the nominee can claim the benefits by submitting the relevant documents to the post office, and the claim can be settled. Then we have a loan repayment. The policy can be repaid, the loan taken against the policy's surrender value, in installments or in full at the time before the maturity date. Then we have a bonus payment and the grievance redressal. The policyholder will receive the bonus payment along with the maturity benefit or the death benefit, whichever is applicable, followed by a grievance redressal. In case of any grievance related to RPLI policy, the online portal or by visiting the designated post office, the complaint will be resolved within a specified time frame. Then about the nomination update, the policyholder can update their nomination detail, adding or removing the nominee as required. And the next is your premium payment reminders. We'll send the premium payment reminders to the policyholders by SMS or by an email. So these were the steps owing to which you can open your account and take the best possible use of the RPLI services. Thank you very much.